Hello and welcome everyone, and welcome to another Mintec webinar where today we are going to be covering the current state of the nut markets and some of the COVID impacts on them. I'm Aidan Wright, pricing analyst covering the nuts and dried fruit category at Mintec, and I'm joined by two of the senior traders from Free World Trading, Alicia Perez and Michael Stevens. As a summary today, we are going to start off with myself covering peanuts before moving on to almonds with Michael, Brazil nuts with Alicia, and cashews again with Michael to close out. Feel free to ask questions throughout. There is a Q&A function. We will come to them at the end. And if we run out of time and don't manage to cover your question, we will answer it via email after. Also, a little bit of housekeeping. If anyone wishes to download the slides or any of the other handouts, that is also a function and you can download them at any time. So if we can get started with peanuts. So I thought we would start off looking at Europe. So on the chart, you can see the Mintec benchmark peanut prices into Rotterdam from the four main origins: Argentina, China, Brazil, and the US. So just to kind of set a little bit of the groundwork here, what we can see is that peanut prices at the moment in Europe are very firm. We've got China trading at quite a high level due to some strong demand from the internal Chinese market. US prices have come down. Previously, they were at around the 2000 mark with aflatoxin infecting the crop, meaning that very little could actually come into Europe. As the new crop's being harvested, this price has dipped as more has become available, despite some delays to harvest due to the kind of repeated rainfall events and hurricanes hitting parts of Georgia and Alabama and Florida. At the same time, we've seen the Brazilian and Argentinian prices pushed up a little bit due to kind of lower availability as more and more has been shipped. So what you can see from this is, especially compared to the previous years, some of the nut categories, particularly almonds and cashews, as Michael will be covering later, have taken a real dip, partially on the back of COVID, partially on the back of large crops. Peanuts, meanwhile, have stayed relatively firm. And in terms of pricing, the COVID impact hasn't been as good as as big as you might expect. So why is this? Well, it's really a combination of factors. So there have been some negative impacts from COVID. And what we've seen is a drop-off in sales through bars and pubs, airlines and food service, but we've seen a strong demand for long shelf life retail products, and peanuts really come under this description. Firstly, they last forever. We've seen strong sales of the salt and flavored peanuts and peanut butters as well. Obviously, peanut butter isn't as big a thing in Europe as it is in the US, but everyone I'm talking to said there's been an uplift in sales, and this has continued even past the initial panic buying of the pandemic, and sales are really going strong moving forward. Some people have been saying that the drop-off in bars and pubs has outweighed the retail demand, but in terms of the import data we're seeing, this doesn't really seem to reflect this. So the graph on the left shows the current level of EU peanut imports compared to the maximum import level, minimum import level, and average import level over the last 5 years. And what you can really see is, especially since the pandemic started, imports have been very strong. In all but 1 month, they've actually been above the maximum level in the last 5 years. And from what I'm hearing, due to this continued demand as well, this is kind of really expected to stay the same in the long term. We're definitely not going to drop down to average this year. We're going to continue cruising either above the maximum or close to the maximum. So looking beyond the EU, the price graph I previously showed you, you might remember that the Chinese price was very high. And this is one of the things that's really dictating the world peanut market at the moment. So the price graph on the left, as you can see, that Chinese price right above the others around the $2,000 mark is that thick orange line. We've got the other prices below it, but as you can see, it's really not competitive. So why is it at this higher level? Well, it comes down to one simple factor. It's really strong demand for groundnut oil. Groundnut oil prices have moved up, and general veg oil demand in China is quite high at the moment. It dipped when COVID started, but it's since really recovered. There's heavy demand moving into the festival season, especially ahead of Chinese New Year. And this is really incentivizing the Chinese to keep it internally and crush. In fact, this strong demand has actually meant that China seems to be importing farmer stock from both the US and Argentina, which is really tightening global supplies and giving people an alternative market to sell into. What this, of course, means is since the internal market the demand for it is booming, there's very little actual incentive to export. And that's what we've seen. We've seen very minimal stuff coming out of China into the EU over the past few months, and this seems set to continue. This comes to give you an idea of how much this demand has increased. A lot of people are saying the Chinese crop has actually increased by about 5 to 10%. They're still importing at this point. We could see a little bit of a drop off after Chinese New Year as some of the oil demand does start to dip. But at least in the short term, this is really going to support the market. So going from the high price to the low price, you can see the lowest price on there is out of the US. And the US has actually had a fairly large crop coming in. There are some quality concerns due to the amount of the crop that's been sitting in kind of these wet, sodden fields after the hurricanes have passed. But so far, quality seems relatively good, and the actual yield seemed quite good as well. Overall, obviously, we saw a boost in the area, and it really makes a difference after the high prices we saw last year due to the aflatoxin-affected crop. You can see prices dip and stabilise at this level. So you would think that they'd be the most competitive origin to sell into the EU. And this was the case until last week, where we saw the EU put a 25% tariff on US peanuts. This is both raw, blanched and in-shell peanuts, and everything on the delivered price is 25% up. So what this does, looking at the chart on screen, is it boosts that US peanut price above the Brazilian and Argentinian and actually makes it the second least competitive origin. What this, of course, means is that the South American prices have room to move upwards, and this is indeed happening. You can see it if you look at those increases in the Brazilian and Argentinian prices over the last few weeks. This is almost a direct result of this tariff being put on the US prices. So is there actually an incentive for the US to discount, make themselves more competitive, and be able to enter into the EU market? Well, not really. So as the first point, we'll cover this a bit more later, but there's limited competition from other origins. As we've already established, the Chinese internal market is keeping most of their supplies there. And for Brazil and Argentina, they've started selling out. They've got very little left that isn't actually committed. And at the same time, the US has a very strong internal market currently. What we saw at the start of the pandemic was this kind of pattern of pandemic buying from consumers. We saw long life items like peanut butter and peanut snacks really flying off the shelves. And overall, from March to September, there was a total 8% uplift in all processing. Peanut butter processing really increased. Obviously, it's the American staple, and it's something that people really wanted to keep stocked on their shelves. So since the pandemic, for most months, we've seen anywhere from a 20 to 10% increase in terms of peanut usage for this production, and this doesn't look set to change. You can see on the graph on the right, it's significantly higher than the maximum processing values over the last 5 years, and this seems to be continuing. At the same time, the US has got a strong export demand from China. As I've previously mentioned, China's bringing Argentinian and US farmer stock to crush for groundnut oil. So when you consider these factors, there does seem to be fairly limited incentive for the US guys to actually decrease their prices to get into the European market when they've got limited competition from South America, and they've also got a strong domestic market, and China also take as much as they can at a solid price with no increased tariff on it. What we've actually seen is we kind of saw the US price dip down to around 1,300 mark for a little while, but last week we actually saw it increase again due to this. We thought we might see it at least remain steady, but no, it was up $25 a tonne last week. So this brings us on to the last region we really need to take a look at, which is South America. So as I've previously mentioned, there is actually limited crop left in both Brazil and Argentina. Brazil at this point has almost completely sold out, and we've actually heard of internal Brazilian prices being so high that they're bringing in Argentinian because it is cheaper. At the same time, people I'm talking to are saying that for Argentina, about 90% of the crop's already committed. There's limited volume to move, and China is obviously buying as well. So we are competing directly with China. So what it really means is with this limit and with the US prices moving higher, there's definitely room for what is left from South America to move upwards towards that ceiling that the US has now set. However, moving forward, obviously, we've just kind of wrapped up planting in South America, and this really brings us to La Niña. La Niña saw really reduced precipitation in the key growing areas you can see circled on the left in both Brazil and Argentina. And what this meant is that planting was delayed. We have seen some rain since then, and the peanuts were still planted kind of within the optimal timeframe window. However, we need more rainfall going forward to kind of support optimal crop development. And this is really going to be a watch point moving forward. This is going to be one of the main market driving factors, is when will the South American crop come online and how will it fare, given that rainfall patterns supposedly aren't going to return to normal till after the new year? Are we going to have enough in there? Are yields going to be good? This is one of the things that is really going to support prices moving forward. And kind of what people are saying to me is, this is what you need to keep an eye on. Keep an eye on South America. Everything else at the moment is factored in. There is kind of still this room to move upwards, but the South American dryness is the thing to watch going forward. So hopefully I answered some of the questions you guys have on this, and I would like to hand over to Michael, who's going to take us through the almond market. Michael.
Thanks, Aidan. Yes, I just want to talk about the Californian almond market over the last 12 months or so, focusing specifically on California, as it is where over 90% of the world's almonds come from. So on my first slide here, I've just got the price trend graph over the last 18 months. As you can see, it's sort of the price started to really dip at the end of last year and into the start of this year. So I wanted to look at what sort of factors have played a role in the decrease in price since the start of this year. So let's just remind ourselves, the last crop was a £2.55 billion crop, which was one of the biggest. So we had a big carryover going into this year. We then had the 2020 crop subjective estimate, which was released on the 12th of May. And it was this whopping £3 billion number that came out, which obviously dragged prices down. We then had the objective estimate, which confirmed or reaffirmed what the subjective was saying, of £3 billion on the 7th of July. So this took away sort of any speculation that the crop might not be 3 billion, and we're going to have to work on this number for the foreseeable future. We then did see some drop-offs in shell into India, particularly around sort of March, April, which again sort of pulled the prices down. And then towards the back end of this year, the start of the 2020 crop, we have had some very, very strong shipments, August through to October. October actually being the largest shipment number in the history of record out of California, £309 million, which sort of brought the price up in the last quarter of this year. We're currently running at 25% above last August to October. So for the same period, we're 25% up on our shipments. I then wanted to have a little look at the pandemic specifically, what things could have influenced the prices there. Well, first of all, the factories did remain open predominantly, so we didn't have any issues so much out of California with goods being shipped out. One of the things we did notice in Europe and with our customers is the service sector did close off. So that's your bars, your restaurants, hospitality. So we noticed a significant drop-off in the call-offs from these kind of customers. However, on the flip side, our other customers who are sort of packing into supermarkets, they were actually running quite ahead of schedule in some cases, calling off goods at quite a rapid rate. We did notice some of the processed almonds actually did increase as home baking took off, particularly through lockdown. Everyone was at home baking, presumably. We then also we did notice, as I mentioned earlier, a decrease in shipments to India for a couple of months, but actually since since April, May, June, July, the shipments actually picked up quite significantly again, and India actually finished with around about 10% increase over the same period last year. So the shipments have remained robust. The prices have been low since the turn of the year, and this appears to have fueled demand. I just wanted to have a little look at some of the buyer behavior that we've sort of seen over the last 12 months. So, of course, our customers in the service sector have been a little bit less committal on forward contracts, presumably worried that certain areas of their customers will be closed again. On the flip side, we've actually seen some of the customers that work close with supermarkets who have been actually very keen to try and book longer spreads. It's the lowest pricing for at least 8 years, and they want to take advantage of this and lock out as far as possible, taking advantage of the cheaper prices. This has sort of been reflected as well in the spot demand that we've seen recently, which has been quite low for this time of year, a bit unusual actually. We'd normally have quite a lot of spot demand just before Christmas, especially with the transitions of the crops and the shipments. This hasn't been the case this year. Now, that could be a number of things. It could just be that people are quite well covered. It could also be sectors that are unsure of the Christmas sales and not wanting to carry any stock over it, at the end of the year. The other thing we have seen is a movement to smaller kernels. So this 2020 crop, we're hearing and we are seeing that the size of the kernels out of California are much smaller than last year. So sizes like the 23, 25s and above have become very, very difficult. Some of our suppliers are even saying the very big kernels like 1820s don't even seem to exist this year. So we've seen some customers try to work on their specs and take smaller size kernels, which will allow them to take advantage of the cheaper pricing that we've seen this year. So I just wanted to have a little look at how things might progress over the next 12 months. So first of all, we've got to look at there has been strong demand, and the shipment numbers have shown that. The last shipment number, the October shipment number, showed that commitments, so that's sort of sales forward in the books, are up 45%. So that sort of ties back into some of the customers that are taking advantage of the prices and booking forward. That's reflected in the commitment numbers. We are sort of aware that the service sector might still be uncertain, and they're going to continue to buy in smaller chunks. We know that almonds in general are in a wide range of products. They're an ingredient in many things. So we do I do expect to continue to see strong demand. One of the things I also wanted to highlight was the cost of water, and I know it's something that does come up quite often in California, but particularly in the west side of the valley, the break-even cost has increased over the years and is around about $2 a pound now for standard fives, sort of the lowest grade of almond there. So if you were a grower and you had to sell today somewhere around about $1.75 a pound, and you're in the west side, you're probably going to take a loss. In which case, you might just think, I won't sell contracts next year right now. I would rather hang off and wait, because at worst, it might end up being the same price I get. I think it's very difficult mentality to lock in a loss at this stage. However, the underlying factor is it is a big crop. It is a huge crop. And with the carryover of last year of 450 million pounds, there are a lot of almonds to sell, and the shipment numbers do need to keep on track. They're currently running at 25% above last year. But to have a carryover next year of less than 600 million pounds, California needs to ship 18 to 20% above above last year every month. So it ties back into big crop, and we still expect prices to be very much demand driven. That's all for me. I'll just pass on to Elsa now.
Thank you, Michael. Good afternoon, everyone. Thanks for listening. Today, I'm going to talk about Brazil nut kernels. So let's look at the global exports of Brazil nuts. There's 3 participating countries. We have Bolivia, who is the largest, holding over 70% of the market share. Their annual crop and exports range from 20,000 metric tons to 24,000 metric tons, plus or minus the carryover figure from the previous crop. Their Bolivian product is heavily distributed into Europe, with around 65% destined for Europe. Holland being the largest importer, followed by UK and Germany. USA does, however, still participate, and they do import Bolivian product, but still sitting under Europe. Peru also contributes to the global crop. Their crop range is around 4,500 tons to this 5,000 figure. Their product is heavily consumed in the US market and Korea. And lastly, Brazil, well, they do participate in the global crop, however, on a sort of small scale, and their quantity exported is very variable depending on their domestic demand. So if we just look at the price trend throughout this year of 2020, well, in January, we started off at $2.95 FOB, and by March, we had already tumbled down 30 cents, hitting $2.60. In the summer months, we trailed along a level of $2.40 to $2.25, and then in September, early October, we hit this yearly low of $2.20 per pound FOB Areca, and that's the lowest price that we've seen in probably around 7 years. So just to give you some context behind this price trend of 2020, what we see in the Brazil nut market is that supply and demand are very rarely in the market at the same time. And by that, I mean when the processing sites are all geared up, ready to buy in shell in the first, they have a 4-month window of December to March to buy in shell to initiate the crop. And often we see demand coming in later and later. So international demand doesn't step in to sustain that. And that's how we often have this market sentiment of price drifting or price weakness. The positive impact, however, of this lower price range that we've seen this year is that we've had strong, consistent demand this season, and we have seen that Brazils have played a strong part in the nut mixes again. Just quickly, I'd like to mention that on the contrary, organic certified product is actually, the price has been very stable for that, as the inability of auditors to travel out to Bolivia this year due to the COVID restrictions has meant that the supply of organic certified material has been limited, and therefore we saw a much more stable price in organic material compared to conventional, which was on the weaker side. So the effects that we saw from the pandemic this year on the market, well, during lockdown, Bolivia had very strict lockdowns during April and May. They had around 4 weeks of zero production permitted. Then they moved on to sort of reduced production schedule, reduced hours per day, less days in the week, meaning that overall we had reduced final output of finished product, and thus resulting in some shipment delays. They had increased local quarantine controls, meaning between towns and communities, the flow of in-shell raw material was moving around slightly later than expected into processors' hands. We've had this continued shortage of containers for export. Now, Bolivia's had massively reduced imports throughout the COVID pandemic into Bolivia, and therefore we've seen this general reduction in marine traffic throughout all of South America, and that's really given us a big lack of containers ready for exporting goods out. We haven't, however, seen any real sort of influence on the price from the pandemic. In fact, in previous years, any sort of shipment squeeze would have maybe firmed the price at all, but actually what we've seen this year is that it's actually assisted in stabilising it sort of as we got to the end of European summer, where we could see that on the graph between sort of September and October. Because what actually happened was that every time supply and product went into the pipeline, the supply pipeline, it was consumed. So if anything, the pandemic slightly sort of stabilised the pricing, particularly later in the year. Whereas we saw other nut kernels that were hit in the service sector, we didn't really see any effect on that for Brazil's consumption. It's heavily distributed into monopacks for retail, so we saw sort of steady demand all year. In terms of buyer behaviour, from retail packers, we saw that they behaved quite conservatively, averaging down throughout the year, and we saw this sort of trend to lock in forward purchases covering through to the middle of next year. So I'd just like to touch on the Brazil nuts role in sustainability of the Amazon. So it's a wild harvested product, and the harvest and distribution of
Elsa, I think we've lost you there. It looks like you've gone on mute. Would you mind just turning your microphone back on or resetting it?
Yep, I'm back on. Can everyone hear me now? Okay, so the harvest and distribution of Brazils is a means to prevent deforestation. By generating an income for the raw material, the collectors have a real reason to protect the trees instead of converting to this other land use, such as unsustainable timber harvesting or cattle ranching. Brazil nuts represent 70% of Amazonian income, so it's incredibly significant and with little possibility of other diversification. So what we do see is that thousands of livelihoods depend on this. It has a significant impact on saving the rainforest, and what we can see is that between all of us who participate in this sector and all the consumers that buy Brazils really have the ability to contribute to protecting the rainforest. And what we've seen when we think about provenance in the past 5 years, we've seen a real growth in this opening up of the supply chain about where the product comes from and the ability to inform the consumer of the communities involved. And certainly when we think about provenance and what it stands for, Brazil Nuts definitely has the possibility to share this information with the consumer. And you know, if these people live in the middle of the jungle, they have a real sort of fascinating life. So we do feel that it can be of great marketing value and ultimately boost consumer product knowledge. So if we think about the next 12 months, what we foresee going forward for the next year. So November and December, we're really in the crunch of raw material decision time. Quite often we have this situation where the collectors, there's sort of a standoff between collectors and processors as they try to establish a mutually agreed base price for raw material and to enable initiating the crop. And you know, we have sort of seen this year that we've had very low in-shell pricing. It's got to historical lows. So the processors are mindful of that at the moment. We know, you know, Brazil's has to sort of compete with other nut kernels. So I think at the moment, November, December will sort of be a bit of speculation about what the finished price of the raw material will be. And it won't be until January, February that we see the market starting to take shape. We expect reduced container availability to continue, and this sort of vessel rotation change due to the COVID impact looks set to stay. Goods are flowing, it's just taking slightly longer than expected, maybe 4 weeks behind the original booking date. Regarding the crop, well, unlike other nut kernels, we have no annual crop projections, being that it's a wild harvested crop. We do know, though, as we stand today, origin is currently sold out, more or less, apart from some secondary grades. with strong shipment figures each month. So we don't expect any carryover into next season. From a demand perspective, well, Brazil nuts are very monolithic at the moment. They sort of participate in the mixed nut packs against, they have a lot of competition from products like almonds and walnuts, which are at very cheap levels at the moment. So in our opinion, this product is fully demand driven, and that's why we do therefore see a great need for long-term marketing campaigns where it's possible to try and get that message to the consumer about the importance of it from a sustainability and environmental aspect. On the price expectation, well, we see that as sort of stable to slightly firm on the short term, considering that crop 2020 is reaching a well sold out position. But as we go into January and February, when the bulk of the receipts of the raw material flow into the market, if at that point we do not see international demand coming in Q1 in significant quantities, at that point is when we see the processors, they have a real need for liquidity to keep flowing into the market. So if demand doesn't come in during Q1, there's perhaps a slight chance that we might see some price weakness. However, it's worth noting that this is the first time in several years that we go into the new season with a very low base price. So I personally feel there's more chance of a slight upside than downside. So Brazil nuts are available in many different formats. It's a very versatile product, and all these types of formats that you can see here are available now. It takes very well to different flavour inclusions. It's great with chocolate, it's great in confectionery. It's a very stable product. It has 24 months shelf life. We can see here we've got a sliced format, which is great for mueslis and granolas. We have chopped, which could be a great inclusion for ice cream, cookies, and then this flour for cereal bars and biscuits. And we do know that it's being quite heavily used in South American manufacturing industry. And although we see it growing in Europe, we would encourage NPD projects to consider Brazil's as a sort of manufactured ingredient, whereby we could tie in the sort of environmental aspects. So we have come up with, as a result, actually, of the sort of the drive that we've seen from our customer base and trying to open up the supply chain, and this sort of drive and trend behind ethical sourcing. It's our ambition over the next 5 to 10 years to really develop that. And what we've come up with is a concept called shared future. And through this, we identify potential projects in our supply chain that stand out from a sort of positive social and ethical aspect. We have initiated a project with the Chacobo community in Bolivia. They're the last remaining indigenous tribe. We have a couple of objectives there, a 10-year objective through a reforestation plan, through the plantation of seedlings in their natural habitat, and also a 5-year food aid programme whereby agronomists would assist the communities in terms of making them more self-sufficient with their food source. We also are working on a project called El Choro. It's a community who is the first in the Brazil nut sector to be certified by EcoCert standard, and it's under the Fair for Life certification. And this community, the way it works is they receive a premium on their raw material, and they have that premium to spend in things such as medical supplies, books for schooling, and equipment to finance the crop. So these are the types of things that we see growing in Brazil nuts in terms of the sector in general. And I hope I've given you sort of a more in-depth insight into what comes behind just pricing and the factors that contribute to the Brazil nut industry. So thanks for listening, and I will hand back to my colleague Michael now, who I think will go on to cashews.
Hello again. I just want to have a look here with about the cashew nut markets, in particular the Vietnamese cashew nut market. So first slide here is the price trend over the past 12 months, the price graph. This is the price for W320s, the FOB Ho Chi Minh cost. So I wanted to look at some of the main points that have affected that price throughout the year. So first of all, we had a good carryover of raw material into the Asian crops, which came in, the Asian crops come in around about February, March. So that caused the initial, the decline, as you can see on the graph there. We then had very good buying, strong buying as we entered into the summer months, which increased the pricing with the good demand that we were seeing. The pricing then came off a little bit a bit later towards the middle of the summer and the end, as buyers had taken the position that they wanted to at that time. And the demand had slowed down a little bit, remembering there is a lot of good raw material in the market at that stage, and the lack of buying builds pressure up on those raw material sellers and the Vietnamese packers themselves, who tend to not be able to withstand long periods of time where there is no buying. Purely, these things are down to financial concerns. The banks in Vietnam not financing against forward contracts anymore means that when there are quiet periods in the market, we can often see dips in prices. Then further on towards the end of the year, August, September, we did see the price start to move up again. This was off the back of a private company's purchase of 300,000 tons, or just over 300,000 tons of Ivory Coast raw material, which looked to sort of prop the market up into the last quarter of 2020. So just looking specifically at the pandemic and what issues that may or may not have had for the market. Well, there were some logistical issues, of course, particularly in Africa, but they actually weren't as bad as feared. At the start of the year, there was quite a lot of worry that if Africa shut down, there would be a lack of raw material moving into Vietnam and other places where it's processed. There were closures for 1 or 2 weeks at a time, but it didn't particularly affect the flow of material too much. Vietnamese factories in general remained open. We didn't have any issue in particular with any of our suppliers getting material out of them this year. The factories in India did close for long periods. That didn't affect the price too much, as India tends to be more of servicing their domestic demand these days, as Vietnam has overtaken them as the lead exporter, particularly into Europe and into the United States. They do sell into some of the higher end stuff in into the Middle East and Japan and South Korea, but in general, we didn't see too much effect from those factories being closed with our customers as such. We did see the service sector slow down quite significantly, the same like on the almonds. These customers were closed for long periods, or their customers were closed. So we did see a drop off. However, the change in consumer buying pattern over lockdown, well, basically because people could only really buy from supermarkets, everywhere else was closed. So we did see a huge increase in demand from our customers that pack for the supermarkets. As lockdown came to an end, well, the first one at least, in Europe, we did see some good post-lockdown demand as companies started to sort of open up again and try and fill their pipelines up. So the next slide I wanted to look at here is just some buyer behavior, how we've noticed some of our customers' behavior changing over the past 12 months. So in previous years, it was quite common for shorter periods to be covered. So you'd have contracts that might be sort of 3 months, maybe maximum 6, but the periods were much shorter. This has been a bit of a change this year. We've noticed that, despite the pandemic, this year we've actually noticed a lot of our customers are putting down 12-month contracts, and some are even asking us to do up to 18-month contracts or more, which is quite unusual, but actually does make a lot of sense when you look at where prices are and where they have been in the past. Buyers, I think, are quite happy to take the risk out of it and cover for as long as possible, particularly knowing that there will be a certain amount of cashew nuts that will be needed no matter what. There is a well-established market. So with some confidence, they have felt that they are able to take advantage of the lower prices this year and try and cover for much further than they would have in the past. So just sort of looking forward and what we might expect over the next sort of six to 12 months or so. Well, currently we are in that position where the raw material is heavily influencing the prices that we're seeing out of Vietnam. And the reason for this is the Vietnamese packers tend to be quite square. So they're not sitting on, a lot of raw material now that they bought at cheaper levels. So a lot of them are either withdrawn from the market, or they're giving us prices that we think are quite high for this time of year. And because they're quite well covered, because they're square, they're happy to just look at fulfilling the obligations and just shipping out what they already have, and wait until the Asian crops come into play around about February or March. On the flip side, as I said before, our buyers have been taking longer spreads, so they are quite well covered. So we're not being sort of inundated with buyers knocking on our door, desperate for goods at the moment, or to buy more goods. So the market at the moment seems to be sort of stuck a little bit. It's not really. It's moved up slightly, but it's kind of stuck, and I would expect this probably to continue at least until February or March, particularly with the logistical issues that we are seeing at the moment, difficulty getting goods out of Vietnam and delays, particularly in England and Felixstowe at the moment, in getting goods in. I can't see how we're going to have a lot of space between now and February, March for the price to come down. Of course, after the Asian crops are in, potentially there's some chance for the prices to move down when we have a lot more raw material in the market and sales need to start again. But we have to see where the market moves between now and then. If the logistical issues continue, if the shipments out of Vietnam get worse in terms of container availability, perhaps prices will move up, particularly as the raw material price at the moment is quite high. The last little slide I wanted to have a look at is just a couple of interesting things that we've noticed with our customers at the moment, and in general in the market when we're being asked to quote. And it's two different sort of sides of the spectrum that we're seeing, which is between price engineering on the one hand, and on the other hand, it's improved quality and transparency. So we are seeing a lot of customers that are asking to offer material that is sort of lower specification than before, or blended, so maybe more broken grades, or higher defects in that material. On the flip side, we've actually had some customers that have decided to go the other way, and they're actually looking for tighter specifications, so things like crispier nuts and less defects. And I think the thinking there is, while prices are quite low, perhaps it's an opportunity to focus on the higher end, which might actually generate sales through sort of consumer satisfaction, I suppose. There also been an increase in wanting to have visibility on the supply chain, and asking for things like SEDEX and working with B Corp to have a sort of greater understanding of what happens before the goods get to the factories in Vietnam, and having a sort of more transparent supply chain. We're also having some customers that are looking to invest in communities and projects and to build a sort of sustainable supply chain going forward, which is just another little interesting thing that we've noticed recently. So that is about it for me on the cashew nuts. So I think now it maybe goes back to Aidan.
Yeah, thank you very much both. That was fascinating. Really appreciate your time. It is now time for the Q&A. So if anyone has any questions, feel free to type them now. We'll try and go through the ones that we have got. If we don't get to them, we have your emails. We can answer them by email. So starting off, one for me. Aidan, great presentation. Thank you. How will Biden taking over office in the US impact tariff and peanut prices? Also, will Brexit have any impact on this? So this is obviously one of the things that's really come from this, in that the tariffs that were put on US peanuts are in relation to an ongoing trade dispute over airplanes, essentially. And Trump imposed a large swath of tariffs on a kind of a very wide variety of EU products. And it was obviously his administration that's done this. There was some talk over whether or not the EU would actually implement these tariffs on US products before the elections, but they have. And at the moment, for anything to actually be removed on this tariff list, there needs to be signs of progress being made. Obviously, this is unlikely to happen until Biden is in office. He also needs to get his trade officials in positions, and then negotiations should start. So in the short term, I would say it is very unlikely that we're going to see these tariffs lifted. Obviously, as conversations move forward, we could see that happen. But given how long trade talks always take, that's an issue there. What that means for prices is obviously it's bolstered up the kind of the bottom end of the market, and it's really given kind of free rein for the South American prices to rise towards that ceiling that the US price is now set. With Brexit, there technically the UK, after the UK leaves the Union, could basically say, we're getting rid of the tariffs, they're not on anymore. Great, UK importers can bring it in, no tariff. However, the government is not taking this stance. What we've seen is they have said that when we are leaving, the UK will be independently imposing these tariffs unless kind of significant progress is made in the interim. And if not, staying as the 25%, and it will only be removed kind of when the US kind of shows willingness is making progress towards removing the tariff that they put on a mixture of EU and, once we've left, also British products. So quick question for Michael, I see here. Hi, Michael. You mentioned the cost of water increasing and the break-even price sitting below current levels. Do you think the current market is oversupplied, and will this lead to an increase in removals this year? Michael, your mic may be muted.
Sorry. Yes, so I missed the last bit. It sort of cut off. Do I think that so would you just...
do you think that the current market is oversupplied, and will this lead to an increase in removals this year? I'm assuming this is referring to removal of almond trees.
Of almond trees. Do I think it's oversupplied? I think it is oversupplied. Every year we're getting a sort of bigger and bigger carryover, which is okay if you don't continue to get a bigger and bigger crop. As I think I mentioned there, that 18 to 20% over all the shipments need to be up to have a £600 million carryover. Well, last year was 450, so that's increasing again, particularly if we're going to have a crop next year that might even be bigger than 3 billion. It might not even need to be, and we'll still have enough almonds. In terms of pulling almonds out, it is possible, but then we're looking at walnut pricing at the moment is very low as well. So I don't think people will pull the almonds out too quickly, because generally it's a long-term investment, and I think they'll be thinking that in the future, prices could move up again. I think it'll back itself to continue with strong shipments, and farmers are in it for the long term. So if you pull them out, you've got to sort of be thinking 7-10 years. Walnut trees can take longer than that. So I think it would take more than just 1 year of pricing below cost for them to pull the almond trees out. Maybe if we get 2 or 3, then that could change.
Thank you. I think we've got a few here for you, so you may as well be leaving your mic on now. Another one. Do you think we will see almond shipments remaining strong enough to shift this crop, or will they slow significantly next year if purchasers are simply taking advantage of these low prices?
I think the shipments will remain strong, but they have to. So I think it's going to be difficult for the prices to move up too much from where they are. I think we might end up seeing a situation all year into next year where pricing gets pushed up when we have a strong shipment number that comes out. But I think very quickly it will slip back again because they need the shipment to remain strong and they have to keep selling. Of course, things can change in February if the bloom is an absolute disaster. Then California will be saying, well, we need a bigger carryover because the next crop's not going to be big enough. Then things could change, but we have to see with that. But I think the shipments will remain strong, but then they do have to remain strong.
And another one for Michael. How do you see the W320 price out of Vietnam over the next 3 to 4 months?
The next 3 to 4 months, I would say the price is more likely to move up in the next 3 to 4 months. Before, I do think the pricing will be lower in round about April, May. But my worry is, in the meantime, I think things are going to be very difficult, and I don't know where it's going to get to before it could come down. So it could, if things continue on this path, with the difficulty of getting things shipped out, with the raw material price quite high, and with the Vietnamese packers not having a long raw seed position, then I think the market could quite easily move up 10 to 15 cents just through these difficulties alone. And then I think the prices will slip down. I think certainly from what we're seeing with our buyers is they've actually done quite well, and most of them have covered their needs until the end of Q1 next year. So I think most people will be okay. They've taken advantage of the cheaper pricing earlier and not so exposed. But I think in the meantime, between now and say April, I think things will be a lot more difficult.
Perfect. Now, one for me. Aidan, do you see the Chinese peanut price coming down? Now, quite an interesting question. Obviously, it's currently around the $2,000 level. As I've previously mentioned, that was kind of due to this strong groundnut oil demand. From everyone I'm talking to, what they're saying is this is not really going to change really before Chinese New Year. It's really leading into that, and obviously the massive vegetable oil consumption we see at that point. After this, if we saw the veg oil demand dip, there's the possibility that it could move lower. But the other thing that we really think about at the moment, really in relation to COVID, is shipping. Shipping out of Asia is increasing significantly in cost at the moment because too many containers kind of in the Western world, particularly in the US. And this could actually push the price up even higher, at least in the short term, if we kind of see logistics really getting squeezed like they currently are. Now, I can't see many more questions, so I will address one that I've seen pop up a few times. Yes, there will be a recording. It will be sent out to you later this week, and handouts can be downloaded now, or they can also be downloaded off that email. We will give it another few seconds to see if anyone has any more questions, and if not, I think that will begin to draw our session to a close. So I think that is another one coming in. Question about Niña. What amount of peanuts could be impacted in terms of percentage? I know particularly dry seasons can impact soybeans by over 20%. It's a bit of a kind of tenuous question at the moment. Obviously, if we quickly swing back to the relevant slide. So the key growing areas for both Argentina and Brazil are highlighted there. Obviously, at the moment, they're quite dry. There has been a bit of rain. So far, it does look like they're going to be doing okay. It's more of a watch point than anything else at this stage. It's within the optimal planting window. So currently, if everything else went perfectly, there shouldn't be any issues. It's if we don't see rains kind of coming post-Christmas, particularly, that we could see yields start to be affected, crop development being affected. Weather patterns are supposed to return kind of slightly more to normal post then, but until then, we are kind of set for more dryness intermittently. And it's really a question of topping up the soil moisture in the meantime. Now, I think we have given everyone enough time. So I would like to say thank you very much to both of my co-presenters today. Is there anything either of you would like to say, or have you managed to say it all?
No, I think that was great. Thanks, Aidan. Appreciate being invited on.
Thank you for the opportunity to reach out and talk to everybody.
So if anyone has any questions, by downloading the handouts, all of our email addresses on there and contact numbers, so feel free to reach out to us directly. You can also get in touch with myself or any of the pricing team at pricing@mintecglobal.com or on the phone number on the last slide. So without further ado, I would like to thank you all for attending, and I think that draws us to a close today.